They also think that because they can go out and deduct something on their taxes, that all of a sudden it's just free or something like that. Deductions are not free money whatsoever. I run across this situation all the time where someone goes out and gets a $20,000 piece of machinery and they think that that's going to equate to $20,000 in tax savings, when in reality, you need to look at your marginal tax rate. Whatever your marginal tax bracket is, whatever that deduction is, you can multiply by that marginal rate, and that's what your tax savings are going to be. So, I run across it far too often, and people will come to me thinking I'm just going to do magic for them, and they make $75,000 a year, which again, there's nothing wrong with making $75K. You can have a great income on $75K, but don't be focused on paying $0 in taxes if you're making only $75K. Learn to take that $75K, invest in processes, invest in employees to gain some of your time back. Figure out how to advertise and build a funnel so you can turn that $75K into $150K. People who make less than $100,000 a year don't really need to worry about trying to save as much in taxes. They need to be focused on turning that $100,000 a year into $200,000 a year, and then turn that $200K into $300K, right? Once we start making $300, $400, $500K in income, now we can start looking at some serious tax saving strategies. Now, that's not to say that whenever you're making $100K, you can't go and put money into a 401K or put money into an HSA or into a Roth IRA and build wealth in a tax efficient way. That's not what I'm saying at all. Far too often I run into people who are so caught up in paying $0 in taxes instead of just making more income. When in reality, most people, their efforts should be put towards just making more income. There's no real financial literacy in the United States anymore. But this, people just are not taught these things, and it can be pretty unfortunate. And because there's no financial literacy, people are just very prone to get out of the rat trap. People can sell you dreams and tell you that, hey, I can get you financial freedom by doing this. One of the biggest mistakes and where people just go wrong whenever they're investing and they're worried about taxes, they really try to overcomplicate things way too much, right? I hear people talking about, hey, let's get this trust and we're gonna have these beneficiaries and then it's gonna be a management company, holding company this and holding company that, when in my experience, the most effective tax strategies are really just simple and straight to the point. You don't need to be out here doing magic or anything like that. Track your income, track your expenses, be aware of what your tax situation looks like, right? Are you looking at a taxable gain? Are you looking at, a high income year where you're going to have a high tax liability? You can come up with things to mitigate that tax liability, whether it's going to go and hire some employees or where you're going to, funnel a lot of money into advertising. Far too often I see people that they want to create a shell company offshore or some crazy strategy that they heard off of TikTok or something like that. And when in reality, that's not even needed. You're going to spend more money in the legal fees just trying to get all that stuff set up than the actual taxes you're going to actually save, right? Now, is there a place maybe for like these 100 billionaires or like these 100 millionaires? Yeah, maybe so, but very few people fall into that category. Most people can really just focus on the basics, right? Just brick by brick, start building your wealth, fund your Roth IRAs, fund your retirement accounts, build a taxable brokerage, get some life insurance if you have a family, start investing in real estate, learn the tax implications of investing in real estate, understand how to look at an income statement and a balance sheet, right?